What is up, my trader homies? Since the last time we talked, Tesla has ripped the faces off of every single short seller. The short sellers in Tesla are all getting divorced, their marriages are falling apart, and their kids now are having to go to public school. The stock market keeps going up, but, big but, there are several underlying fundamental problems with the economy, but the stock market doesn't seem to care. This is leaving us to scour for good deals and good buys. We're like grandmas going to the convenience store to pick up a Sunday paper, clipping out coupons to save 50 cents on a box of granola bars. That's just where we are. There aren't very many good buys in the stock market right now, but I have found them. I have found 3 stocks that are undervalued and ready to run higher. These are the 3 top stocks to buy right now in the entire stock market. What is good, my trader homies? It's your boy Kevin from Touchdown Trades, your trading BFF, your stock market bestie. We got a banger video here today, the top 3 stocks to buy right now. I have found 3 value stocks that are about to explode. They're trading cheaper than they should be, and that's hard to find in today's market. We're currently trading at all-time highs on the S&P, and deals are harder to find than ever before. Before we get started, the chat room is alive and active. Trading-oriented chat room. There's a 2-week free trial for the chat room in the description down below. Okay, so here we have a monthly chart of the S&P, and we can see that over the last few months, we have rebounded off the Rona lows right here, and we are approaching all-time highs, pretty much even with all-time highs. So that's the monthly chart of the S&Ps, and this is the unemployment rate chart. So we're currently hovering right above 10% on the unemployment rate chart. We have come down a little bit since the Rona highs back here in late March, early April, and we've since come down on the unemployment rate. But I want you guys to look at this. Okay, so we're currently have an unemployment rate above 10%. The last time we had an unemployment rate even approaching 10% was back here in 2009. So let's look at the S&P chart where that was in 2009. Back in 2009, we were trading here under $100 per share on the S&P. Just absolute insanity that we can be trading at these levels with the economy. The underlying economy is where it is. It just blows my mind. So when we're taking trades, we're taking swing trades, we're looking for good quality stocks to buy, we have to be extremely careful in this market because the rug could get pulled out from under the market at any time. It's coming, it's inevitable. We're going to have a pullback into the 280s, 260s on the S&P. It's going to happen. It could go to 400 first, but a pullback is going to happen, so we have to be extremely careful when we're picking our trades out. But I've got 3 stocks that I want to go over today that are setting up for quality buys and quality swing trades. So let's jump into those. All right, traders. So the first ticker that we're going to be talking about is STRA. Strategic Education Inc. is an online college platform. They own several online universities such as STRA University. You guys have probably seen the commercials online for STRA University. The STRA basically is a discount college platform where untraditional students, or in today's time, traditional students, can go online and get a college degree. They also, I believe they also have in-person classes and in-person brick and mortar campuses. What is turning me on to this ticker, STRA, is the online platforms. Why is that? Because the state of our economy and because of the Rona. We have colleges closing down all over the country, not going back. So kids graduating from high school are going to be asking themselves, why am I going to go pay for a high-priced degree when I can go take online classes at a college like STRA versus a high-priced college where you're going to be taking your classes online anyway? So STRA is maybe half the price of a traditional on-campus college tuition, and you're getting a similar education and a degree that's pretty much just the same. So the CNBC article is talking about how the influence of online colleges is going to take off in the coming years because of the effects of the Rona. We have this college, Coursera, just founded. Since the start of the Rona, it has seen a 520% increase versus pre-Rona days. So I think we could see not as high. This company, this CNBC article is referencing as a startup, so obviously it's going to see faster growth rates. But I think we could see this STRA take off in enrollments and tuition in the near future. And the best part about this STRA is we are getting this at a discount. Just a few months ago, we were trading up here above $190 a share, right at $190 a share, and today we're trading at $115 per share. It has sold, it had a pretty nasty sell-off back here in late July, early August. So we're going to be getting this thing at a discount, and I believe the climate is right for this thing to take off. So what I'm going to be looking for is I'm going to be looking for this 105 level as my stop. We have a lot of volume traded right above that 105 level right here. So 105 is my stop. I'm going to start accumulating and buying around 115, buying all the way down to 110, and I'm going to look for this thing to head all the way back up to 130. So we have a massive risk to reward trade here. The risk to reward is outstanding on this STRA. I really like the climate for this thing to post some nice quarterly earnings here in the next coming earnings reports. So this STRA, the chart is setting up and the underlying fundamentals are setting up for a really nice trade. All right, guys, so ticker number 2 is going to be this ALRM, alarm.com. They are a online smart security system provider. They service both residential and commercial clients, and they have a suite of products typically ranging from home security systems to video monitoring. I really like this business model. However, I do think they're going to need to transition from your ADT model where you have a technician come install the alarm monitoring system in the home, and I think they're going to need to transition at least the residential products towards a Simply Safe model where you just sell the security system online, ship it to the residential customer, they install it themselves, and then you charge them a small monthly fee. Because we can see right now, if you click on, we'll go to home, for example, the residential service, get started today, you have to order the products to be installed by them, be installed by a technician. And I don't like that at all. And that's why this thing has dropped over the past few months, because alarm service providers such as Simply Safe and Vivint have came into the industry and taken over. However, this ALRM reported Q2 earnings on August 5th, beat expectations, but has still sold off. So I think we're getting a pretty good deal on this thing, and I think management is going to be smart enough to be able to realize that they're going to have to transition the residential products over to a model such as Simply Safe, where you're selling the products online, shipping it to the customer, and having them install it themselves. Sure, maybe your commercial businesses still need a technician to come install the commercial alarm systems and the commercial video monitoring systems, but your residential stuff needs to be installed by the homeowner. It saves money, you don't have to pay a technician, and customers don't want people in their homes right now because of obvious reasons. So let's take a look at the chart here. We can see that we're getting this thing on discount, and we do have a couple nice levels to risk off of. We have this level down here at 52.50. That's going to be my risk, and I'm going to start accumulating into that level down there. What I'm going to be looking for is this thing to fill this gap up here near 67. So we have a very, very nice risk to reward ratio on this ALRM. I really like the business, I like the fundamentals, and I like the technical on this daily chart as well. So that's going to wrap up ticker number 2, ALRM. All right, trader homies. So the third and final ticker we're going to be discussing today is NIO, the Chinese Tesla. And I know you're thinking to yourself, Kevin, this thing is not being sold at a cheap price. This thing is extended. It's up over almost 1,000% over just the past few months. Just last April, or this April, is trading around $2, and it recently hit highs of $16.50 or so. But give me a second to explain and you'll understand my thesis on this. So this NIO is an electric car manufacturer. I'm sure you guys are familiar with it. It's considered to be the Chinese Tesla. They have a pretty sleek looking design and product. And they recently reported earnings. They crushed it. They crushed earnings. They came out with numbers that were much better than expected. JP Morgan and the other big firms were shocked, but it sold off. And it typically does sell off at earnings. But I think we have a trade here setting up, and I think we're getting it at not a cheap price, but a decent price, and I think we can still profit from this NIO. Okay, so if we take a look at the chart, we can see that back here, this is the day of earnings, and it initially gapped up almost 8% and then gave it all back. By the time it closed, I think it closed down about 5%. So in the next couple days, we've just kind of traded sideways, chopped around, and we've regained some of that sell-off. But my thesis is here that we have an extremely strong sector in the EV sector. Tesla just announced that 5-to-1 stock split, and it's been just ripping higher every single day. So we have the sector strength, and we also have a very nice level to risk off of. When you get a hard sell-off on the daily chart like this, when you had that earnings sell-off where it gapped higher, you have tons of volume back here on this day, and then it's sold off. That low right here at about 1250, that's going to be support. That's going to be our risk. That's what we're going to be able to risk this trade off of. So we have defined risk. That is one criteria that we need to have for a valid trade setup. We have a nice chart pattern of the bull flag, and you got the pullback consolidation. And we're going to look for this thing to hold that 1250 level, break out of this pattern, and I want to see this thing break back over that high, that post-earnings gap up high at about $16 per share. So we're risking off $12.50, and we're looking for this thing to hit $16 per share. So we're getting about a little less than 2-to-1 risk to reward ratio on this NIO trade. The chart's setting up, and I like the company as well. So that's going to wrap up the video. I hope you guys got something from it. If you did, go ahead and smash the like button. Give the like button a little snake eye jab in the eyes like we always do. If you haven't yet checked out the chat room, link in description, 2-week free trial. What can you lose? You don't like it? You don't like the trade alerts? Cancel before your 2 weeks are up and you won't get charged a penny. I hope you guys liked the video, and I'll catch y'all in the next one. Peace.
Drop.